Good afternoon, and welcome to this ACT webinar on EMIR, the final countdown. I'm Martin O'Donovan, Deputy Policy and Technical Director here at the ACT, and I'm delighted to welcome our two main speakers. First, we'll be having Daniel Corrigan, Chief Executive at CME European Trade Repository, who will take us through the essentials of the new regulation. CME are sponsoring this webinar, and we thank them for that, and indeed for taking part right now. CME is one of the new trade repositories that will be collecting and holding data on derivative trades, so we look forward to hearing from them in a moment. And they're perhaps someone you should be contacting to discover what sort of services they can provide. We then move on to hear some practical experiences from Mark Benner, Assistant Treasurer at BAES Systems. And this will be followed with time to take your questions. You can send in questions by clicking the Ask a Question button, which is just below your main media player window. There's no need to wait until the end to send in your questions, and you'll find another button there for live event technical support. And can I also assure you that in taking any questions, we'll not be broadcasting your name or company details. A recording of this webinar will be available on the ACT website in a couple of days' time. We all know that the regulation of derivatives has been brewing for a long time, but of course has very much come up the agenda as we move to the implementation stages. The obligations around confirmations and reconciliations started earlier in the year, and we now have the reporting requirement just a couple of weeks away. So let's get straight into it, and can I ask Danny Corrigan from CME to get us started?
Hi, thank you, Martin. I'm delighted to be here. Follow-up from the presentation we did in mid-November as we were just about to be approved as a trade repository. My message over a few slides is really what needs to be reported and how you can do it and what you need to do over the next 10 days or so if you're not already there. So the overview, and I'm sure a lot of people know this, it's bank and non-bank, so it's financial corporations and non-financial corporations in the European Union that have trades or positions in a wide range of over-the-counter derivatives or exchange-traded derivatives. We'll be focusing on the over-the-counter part, non-cleared here, but the same is true for the others as well. And that's everything from rates, FX and equities, but into commodities and other products as well. There is actually a category for another, so if you're not sure what to do with something, just put it into the other. Both sides have to report, which is this is kind of cumbersome, because it really helps, as it is in the US, if one party reports on behalf of the other. That's not the case here. So if you have a transaction or a position already on board in these mandated products, you have to report both sides. You report your side and the counterparty reports his side and your side as well into one of the 6 trade repositories. It needs to be reported on close of business by T+1. So if you do a transaction today, Thursday, that would need to be reported by Friday, close of business Friday. Technically, it would need to be reported by needs to be reported by the Monday morning. So trade today in, for instance, an interest rate swap. The transaction, typically what would happen, you'd get the trade in probably by the end of day, might be by the next morning. That's either from yourself or from the counterparty, and they have until the trade repository is expecting to receive that by close of business Friday. Technically, I think it can work into the Monday morning as well. So there's plenty of time in there. I think the idea is to get as much data in as possible. So there's a couple of definitions a little bit later on. The UTI, so definitions of trade, UPI, definitions of position, and LEI, which is your legal entity identifier. And I'll come to that just in 1 second. Now, the hard start date for this is the 12th of February. However, not all products are considered hard, and not all counterparties consider themselves as being obligated to start on the 12th of February. The advice is all these products need to be reported by the 12th of February, plus the backloading. There are some exceptions, and we'll talk about those in a second. Now, what we're seeing is an enormous amount of corporates and commercials, not just in Europe, but those abroad that have activities in Europe and legal entities in Europe, are aiming to get to that date. Now, The backloading part is something that's worried a lot of people. You have to report back to when EMIR actually came onto the statute book, which was the 16th of August 2012. And there is a real strange set of rules. There's 4 different rules about whether the trade opposition was on the books before or after that date. There is a good solution to that now, in that under the most recent Q&A that came out from ESMA, they will take positions on the night of the 11th of previous trades done there on a position basis for over-the-counter as well as exchange traded. So going forward, they'd expect to see all trades on a daily basis, but for backloading, I'd point you towards the ESMA Q&A guide that came out on 20th of December, which I think it was a great set of guidance in that it made it a lot clearer what to be done. Trade repository is probably the wrong name, because they want to see trades or transactions, but they also want to see positions. And what they've actually said is the trade repository is the one that should calculate the position, but the position, if it comes in, they would take that as being determined as the right position as of the night of the 11th. We can talk about that a little bit later on. Now, the most important thing is this, and the biggest choke point at the moment, is the LEI. We've always said if you have an LEI and a plan, that might constitute compliance according to some people. We think it should be LEI and more than a plan. I think it should be LEI, a plan, and sending in a file, and we'll just go through that in a second, because it is actually quite straightforward. So to get an LEI, legal entity identifier, typically you'd go to the entity that's sponsored in Europe, in each European country. In the UK, that's the London Stock Exchange, who are doing a great job on this. They have a great post-trade service there, and you can apply for the LEI. Now, there is a backlog there, and I think you could either go to them, and that's the best place to go, or one of the other ones in Europe, or you can use your CC from the States for this. But I think LEI is mandatory, and I think it's going to be difficult to start without that. Then you've got to work out which transactions need to come in. There is no definitive list. It's extraordinary that there isn't, but there isn't. And so you have to work out of your portfolio as is and trades going forward, which ones to send in. I'd recommend sending as many as possible. And it's actually quite straightforward to do it. What we're seeing is most people are not going to take advantage of the most technical form of communications we have, say through an API and so forth. They're going to use a CSV file, a common separated value file, and it's actually quite straightforward to take your positions and report those there in according to the, if you will, the technical specifications of each trade repository, and they all look pretty similar. So take your file, submit the file. Now, obviously, you'd have to go through user testing and sign up with a trade repository, or if someone else is doing it on your behalf, the delegatee will have to do that for you. The process then, get an LEI, look at the TRs that are out there if you're reporting yourself, choose a TR, go into user testing, sign a legal agreement with them, send in your test files, or when you're live, send in positions and trades. I think that whole thing can be done in a couple of days. So the longest lead time there is the LEI. There's a definition of some slides in front of you, which we'll send around a little bit later on, about what these LEI, UTIs, and UPIs are now. LEI is centralized source. UTI, there is no central source of a UTI, and this is a problem. In some of the major markets, electronically traded markets, there is a UTI. For instance, all the futures exchanges, the clearinghouses are going to put that on at the close of business. The same is true of electronically traded markets. Most of those will put a UTI on, so it would be very easy. Two parties to the trade will have the same unique trade identifier. However, for over-the-counter products, that's not the case. So you should be looking to your counterparty to provide that, or do it yourself. We at the CME do have a generator for this, and we're looking to make that available for either no cost or close to no cost to put a UTI on the trade. And we're also saying if a transaction comes in, it hasn't got the UTI but has other forms of identity on it, we'd put a UTI on that and send it back. So that kind of service other people are looking to do. It's not like it's over-competed at the moment. If you can find anyone that put a UTI in your trade, that's a good thing. The LEI, you're going to need one of those. UTI needs to be put on a trade-by-trade basis, including positions. It's something called a position UTI. Now, the unique product identifier, we always thought we'd get advice on that one from ESMA. It never came. So you kind of got to work out what you use for that. So that's either ISIN, AII, or CFI. But again, you can look at our specs and everyone else's specs to see how to do that. Okay, intergroup transactions. Intergroup transactions are reportable, and this is one of the things that we've seen with big corporates and commercials worldwide. I'm trying to work out, I think they know what they need to report, but it's how they report that in terms of especially the UTI. So each entity will need an LEI, even if it's non-UK, non-Europe rather. I think it wouldn't be a bad idea to get an LEI or use a TC for that. Otherwise, it's just you'd need the full legal entity of your intergroup counterparty. And it's field 32 for this one, for intergroup transactions. So both parties have an obligation to do that, if both the European Union entities. And we're finding that the groups are essentially saying, within the corporate, one is taking on the responsibility to report on behalf of the others. Now, backloading, these are the rules as far as we're concerned, and you may have read that some people claim that the FCA had it wrong on their website. I'm not sure whether they did or not. Desperately complicated. All it means is that any transaction that's gone on since 16th of August 2012 has to be reported one way or the other in a certain period of time. But we do think, we know for certain that ETD backloading can be taken care of by positions. And if you look again at that Q&A that's just described from Mesmer on 20th of December, it looks like over-the-counter can as well. I think that was only being really picked up in the last couple of days, so I'd recommend, if that can help you with your backloading, to talk to whoever is either going to be your TR or whoever is going to report for you if you delegate it out to someone. Do they read that the same way? Because if that's the case, that's going to make this a lot easier. Otherwise, it's very, very difficult to put a UTI on a trade, a forward foreign exchange trade that was put on, say, a year ago, and it's got 5 years to run. Pretty difficult. And what we're finding is a lot of the banks are employing lots of people to rekey transactions, trying to put UTIs on legacy trades. It's ugly. Reportable fields, up to 85 fields, more than enough. If you're not sure, I'd put it in. I would put something in some of those fields that are unlikely to be used for anything else, things like beneficiary and so forth, have limited use. So I would recommend, if you're not sure, send in the product. If you're not sure, just put it into a field, because it's a best endeavours basis. What will happen within time is that of those maximum 85 fields, you'll find that not all will be reported in the same way, and that's what's happened in the US. But there will be certain fields that will be needed to be paired or compared. So pairing, just say 3 or 4, compared, meaning many more, with different levels of tolerance, things around time, execution time or clearing time and so forth. So definitely more is better in this case. Your trade repository should say if something has come in that doesn't marry up with what they're seeing on the other side, and come back to you and say what that actually is. There's something here about delegated. As we go through the next 10 days, if you don't want to do it yourself and someone has offered to do it, my advice is take them up on that offer. I would absolutely take anyone that's any good and let them do it for you. In fact, I'd go so far as make them sign an agreement so you can put it in front of the regulator and they said they could do it. Because a lot of people said they were going to do this, or it was implied they were going to do it, and they're backing away now because they've just seen it's got regulatory risk, it's cumbersome, it's difficult, and they don't really want to do it. And I think anyone that's standing out there saying they'll do it for you, take away this aggravation, let them do it. The whole thing's cheap, actually, by the way. All the fees around this are cheap compared to anything else. So if someone's going to do it, I'd recommend doing that. I'm not making a pitch here because I know this is the ACT, but all the clearing houses of Europe and the States, which actually means us in the States, are offering to do delegated reporting where we'll report our own trades through our clearing houses, through to clearing members and clients, trades and positions in a timely basis for next to nothing. And as I say, that same is true of ICE and our competitors in Europe. They'll take away a lot of the aggravation in the futures market with the 5 million trades a day. I know we're concentrating here on over-the-counter, where there's many less than that, and there's probably between 250,000 and 500,000 forward foreign exchange trades. But the same should be true as well. Whoever's doing this for you, if it's your bank or it's one of these service providers, they should be doing it for next to no cost. And as I say, if they say they'll do it, go for it. Trade repository differentiators, there's hardly any, to be honest. There's 6, not all full service offerings. And all I can tell you is I think they're getting full. The inquiry levels come in from Riga, Malta, Cyprus, strange countries outside Europe that have people trading there on behalf of European entities, and it's across every kind of institution: asset managers, banks, corporates, commercials, intermediaries, and proprietary trading firms. Some that want to report even though they have no obligation to. I'm not quite sure why they're doing that, but they are. So honestly, I don't think there's much of a differentiator. They're all pretty good firms. You've got big, solid exchanges here, like London Stock Exchange, like Life in the ICE Group, CME Group, Eurex in Germany, and DTCC, who specialise in this in the US along with us and ICE. So, and fee schedules are available. They're on everyone's websites. They're priced on a cost plus markup basis. So, in summary, I think it's straightforward to do this. If you haven't started, that need not necessarily be a problem, but I'd say LEI for each legal entity is going to be required. Talk to someone about generating the UTIs for you. And UPIs, I think within time, a short time, there's going to be some kind of centralised source, an unofficial one, to say what these products are, but there's no definite move on that just yet.
Okay, thank you very much, Danny. Can we now move straight across to Mark and hear from your experiences at BAE?
Thanks, Danny. I'll run through how we at BAE Systems are prepared for the EMIR regulations. We're a global business with key operations in the US, UK, Saudi Arabia, Australia, Sweden and South Africa, with significant throughput of foreign exchange which runs into the tens of billions of pounds annually. We hedge transactional FX exposures in a mixture of currencies which arise from either pricing export contracts in a foreign currency or as a result of foreign currency costs in the supply chain. We also manage the fixed floating position on term debt with interest rate swaps. For us, EMIR affects our trades in the UK, Sweden and Denmark. We're classified as a non-financial counterparty, and more specifically NSC-, as we do not exceed the clearing thresholds. We use the CICI utility to generate our LEIs, and that was for PLC and also for other group companies, which will enable us to report our intragroup trades. Under EMIR, BAE Systems has both risk mitigation and reporting obligations. Under risk mitigation, our external trades are confirmed on SWIFT. All of our internal trades are visible by the internal counterparts on our treasury system, which is City Financials, and we're using a negative affirmation approach for all of our internal trade confirmations. We've signed the Easter EMIR Portfolio Reconciliation, Dispute Resolution and Disclosure Protocol, and we'll use Trioptima QuickPort to reconcile our external trades. All of our internal trades are reconciled on the treasury system monthly. In order to obtain hedge accounting, we have an external trade facing each internal trade, which is hedging an underlying business exposure. We'd not, therefore, look to compress trades with our banks. Our internal trades are entered onto the treasury system at the same time as the external trades. Any trade disputes are therefore resolved during the confirmation process on the day of trading. Under the reporting requirements, which come into effect on the 12th of February, where possible, we will use the UTI generated by our banks for external trades and the reference generated by our treasury system as the UTI for intragroup trades. FX spot is out of scope. For forward FX outrights and FX swaps, we are relying on the FCA and ACT guidance that under the MiFID definition of a derivative, forward foreign exchange outrights and swaps transacted for commercial purposes are not deemed to be a derivative. We will report intragroup transactions on behalf of our entities in Sweden and Denmark, and we will report our external interest rate derivatives and FX options. In terms of our reporting process, we're using DTCC as a trade repository, and we're currently testing uploading into DTCC automatically generated files from our treasury system. We'll report any new trades daily, as well as backloading existing trade portfolio.
Great, thank you very much, Mark. We'll now move on to our panel discussion and questions. But to help us with these, can I introduce our second corporate treasurer that we have with us at the moment, Gary Williams, General Manager of Treasury at Mitsubishi Corporation.
Yes,
Gary, although you're not doing a formal presentation, I wonder if you could just give us a couple of minutes to explain where you are on EMIR and your company.
Thank you very much, Martin. Just to give you some background of Mitsubishi Corporation in London, we're the subsidiary of Mitsubishi Corporation in Japan. It's the largest Japanese trading company. In London, we have a very small treasury department consisting of 5 staff, which includes myself. And probably by far our largest operation is our foreign exchange hedging operation, where we undertake about 15,000 deals a year amongst a panel of 10 banks. Our systems are integrated, so there's very little manual intervention. They speak to each other. So when EMIR came along, I must admit it presented a huge challenge for us. And to be honest, I don't think we were fully prepared looking back in December. We'd just come out of the portfolio reconciliation stage. We were receiving good reports from our banks, and we integrated those, and they're working well. But we didn't have our firm sight on the reporting side, and to be honest, it's been like a ride on a ghost train at times with no fun. Initially, we decided to try and report ourselves, and we looked at the technical requirements of actually shoehorning a foreign exchange deal into quite a huge file, and it was becoming quite a painful process. So what Danny alluded to earlier in terms of going the delegated reporting way, that's what we've done of late. So in the last 2 to 3 weeks, we've been agreeing agreements with the banks, and that way it'll probably take around 95% of our trades out, so we won't have to report those ourselves. However, we're still left with 5% of intercompany trades that we will have to report, so we're looking at doing it ourselves, similar to Mark at BAE, and hopefully we'll hit the deadline, but with probably 2.5 people at times working on this, we're certainly up against it, but that's our key, to hit the deadline by the 12th of February.
Great. Thanks, Gary, for that introduction. Let's move on to questions proper. Do keep sending them in. We've already had a fair number. I should say that there is a FAQ section on the ACT website, and if we don't get around to dealing with your question, we'll see if we can add it to the FAQs there. There's one that has come in, and I have to confess I was half expecting it, which is really this whole question Mark did actually touch on, but perhaps we could just go through again, which is the treatment of FX forwards in the UK. The basic question is, are they in or out of scope? So this is FX forwards, and that would also include FX swaps. I mean, Mark, I think your interpretation was that within the UK they're not in scope and therefore not reportable.
Yes, that's right, and that's the approach that we're going to take. I know that's not the case for some other countries, and we were discussing just before we came online. With yourself, Danny, it's a bit ambiguous, but I think from the UK perspective, we read it as fairly clear.
Is that generally what you're seeing, Danny?
Yes, we're seeing the UK companies, they're going to follow the advice that's being given out by the FCA and others, which is that forward foreign exchange for commercial purposes is not reportable. There is a field for that to say that as well, and I'm going to guess it's 15 or 16 because that's always right where I guess. But there is a field to say that the foreign exchange transaction has been done for commercial reasons. So the other counterparty can say that, so that it won't be expected to see your side of the trade come in.
We do have a question as well, which is what constitutes a commercial transaction, and certainly my experience is that it's a little bit grey. I'd like to add any comment to that.
Well, there needs to be some actual underlying business which would require some hedge to be undertaken. So as long as it can be matched against some underlying need, therefore it's done for commercial reasons. Otherwise, it could be classified as an investment.
I think there might be a sort of transactions that if you were hedging an acquisition of a new business in America, say, that might count as an investment.
I agree.
But again, I think with this, a lot will depend on your own circumstances. UTIs is the other one that we're seeing quite a lot of questions coming in here. UTI generation. I mean, the expectation is we'll get it from the banks, but the specific question we're getting here is UTIs for intra-group transactions. How do you folk deal with that?
I mean, for ourselves, we don't have an enormous amount of trades which we need to report, and because hopefully the banks will provide the external for the internal, we're going to use a mixture of our LEI and also the unique trade reference that comes out of our Treasury system. Obviously, if something comes back more formally on how it's to be done, then we'll have to change that. But at the moment, that's what we're going to report.
Yeah, I think I'm open to advice on this one. We're looking at producing it ourselves, but if there's an easier option, we'll certainly go for that.
What we could do at the CME, because we're doing it through for all our futures contracts, we have that embedded in our clearing solution. We've actually taken that out now in terms of for transactions that are not centrally cleared, so over-the-counter transactions. And so we have a UTI generator. We also have an 18-page document. I know it's almost impossible to get 18 pages on something like UTI and how it's come to this that we're talking about things like UTIs. But that's available on our website, and or we can send it to you people that to have a look at it. But that will tell you sort of the way that it's been designed by ESMA. What the market thinks should be in a UTI. And there's only about 3 things, and formulaically it works. So you can actually easily generate yourself as you just described, and I think that works. Or we're very happy to make that UTI generator available to you guys to use it at will. I think it's a good idea to have a look at that, because what we did is we've taken that from every source known to man and woman, that this is how the UTI should be generated. And, I think that
certainly sounds helpful. And I think ESMA was supposed to be coming out with something that they regarded as acceptable, but I haven't seen it. Have I missed it?
No, they haven't. Letters have been written, and for all ESMA, I mean, they hadn't had the staff and capital for a long while, but there's a lot of questions that need to be replied. And as I said, they have to go around so many jurisdictions to get buy-in on this, and they're not going to get complete buy-in. So that's one of them. So we expected UPI for the product. We expected more on that. There is some advice on UTI generation, but not enough. And so we've published it. I think some other people probably have published the same as well. As I say, it's not a commercial activity. It's one to try and help people get across the reporting line. And I think it's simple. But I do like what you just said in terms of if you take parts of it, you will be able to work out that something's unique, and you can probably bind another transaction to that within intercompany transactions.
Because part of your LEI is actually unique to each individual business. Obviously, the whole LEI is, but there's a distinct part of it. And if you do have a treasury system, I know not all corporates will, but then automatically generates another number, just one add the other. So even for ourselves, there's no risk of duplication.
So you'd put that in the middle, say, and then you put 3 noughts either side to make sure it doesn't look like something that can be picked up in the US, and then build out from there.
So there are ways of doing it, but I think the whole thing does remain rather fuzzy. In terms of backloading old transactions, you'll have to create or capture UTIs from old deals that perhaps were done a year ago, even more than a year now. Any thoughts on what market practice is developing on that?
Again, for us, it's the same process, because those old trades, again, it's easy for us with the treasury system, with the trades all on, because they all have a unique treasury system number. So again, if you're using the hard-coded part of the LEI, plus that number.
I mean, I think the question there was for deals done externally with a bank.
So for externally with a bank, where possible, we rely upon the bank to generate. Some banks just recently, as recently as yesterday, have come in. Well, actually, one bank has come in, the first one that I've seen, saying they won't generate LEIs. That's the only bank that I've personally seen. In which case, best practice, you would try and generate one yourself.
Yes.
So they won't generate a UTI for some of the transactions that were dealt before. See, some of these transactions can be before 16th of August 2012.
Indeed.
So you could go back a long way. I'm interested. It's so difficult to do. And we do know that some of the banks have employed lots of people to rekey and put UTI on, especially the valuable trades, the big, long ones, like interest rate swaps that are not cleared or not messaged through something like MarketWire. But if the banks aren't doing that now, the issue is going to be then is those transactions won't be paired correctly, because if you put your UTI on it,
That's right.
and they don't, and they report it to the same TR, it's not necessarily going to be paired in there. Again, unless they're using different logic, and they can go without that. Now, the way around this is to try and use this term that came to note on the 20th of December last year. So most people are probably thinking of other things on the 20th of December, but this trade reference number came in as not quite an alternate to UTI, but it's a field where you'd put a trade reference number on. A trade reference number, we think that got picked up from MiFID reporting, which started in 2007, where the trade reference is put on a whole series of exchange-traded style things like stocks and derivatives and so forth. We think that's the genesis of it, and we think that works. Whether you'd use your own internal trade reference number there, I think if nothing else existed, that's what it should be. But we think the intent might have been to be MiFID lookalike, but a trade reference number, anything, I think that would work, should go in on there.
So as a corporate actually submitting a file, could I submit a file completely without a UTI? Is it possible?
We've asked that question, and the answer keeps coming back. LEI, UTI, UPI need to have all those things and quite a few other things. But in truth, like we said, if the UTI is not on a transaction, for instance, we'll take it in. One of our associate companies will put a UTI and send it back to you so you can resubmit. I think other people are doing the same as well for UTI. But then the problem is, if the other side is submitting to a different trade repository, if they haven't got that UTI, the two are not going to reconcile. That's a problem for a little bit later on, I think, in terms of how the trade repositories are going to reconcile, because it's going to be all about, which is a mandated date for 12th of Feb as well. But to get that in, we think, some people have said, what if we haven't got an LEI, UPI, and UTI? Can we send in a file? And the idea, I think, in the end is, we'll work with you on that, because I think there's ways of creating for sure for UPI. There's ways of creating, we just said about UTI, it's a generator, it's a machine, it's like a barcode. LEI, if we haven't got an LEI, as you rightly just said, CC, I think we should pick that solution up.
Yep, thank you for that. I'm creating a sort of amalgam of questions here, but there are several which are effectively asking what sort of service providers exist. I mean, there's one specifically on whether there are any external service providers who can help on reporting of intragroup transactions. Well, obviously, they won't know what you've done unless you tell them. I guess your TMS system, if you have one, will be capturing that information. Perhaps turning to Danny at a TR, are you aware of various bureau and service providers who can actually make the connection? I mean, you told us at the beginning that if your bank will do the reporting for you, take the opportunity.
You would have thought, wouldn't you, in this world of profit maximisation and commercialisation, that there'll be someone to do this. So we pounded the pavements talking to the message suppliers. We think they might be able to do it. And some of them might be able to, and there's the three there are Swift and Triana, who's particularly good and enriching, especially in FX. And there's Triumph, I heard you speak before, very good for part of this and for portfolio compression. And then there's Market. Now, Market is particularly good in the derivatives space. Now, they may say they'll be able to do this. I'm not sure, because we went to try and find a solution to everything, and they're the only real 3 or 4 message suppliers. Then you've got the value-added service suppliers. Some would claim to do it. We actually haven't found anyone that can do just that. We're looking to sign up with everyone, of course, and we're sending out our service provider agreement to anyone we think will be able to take trades into our trade repository. On that one, we haven't got that answer.
Okay, I'll move on to a few which I hope we can deal with fairly straightforwardly. Do I need an LEI for Swiss companies if they trade derivatives with an EU company?
The EU company does, but Switzerland doesn't, because Switzerland's outside the EEA.
But my understanding, though, is that the EU company who is doing the reporting will actually want to know an LEI for its counterparty, even though the counterparty doesn't sort of itself have to have an LEI?
That's correct. You can ask them. So let's say European Union to Switzerland, the European Union entity has to report, can ask for an LEI, but they're not obligated to do that.
So you're in a sort of, well, you need to agree between yourselves.
Yeah, but what you'd have to put on there is, without that, we'd have to put the full legal entity anyhow. And the reason for that is to have the LEI and the full legal entity is if you haven't got the LEI of the counterparty, the regulator will see that the counterparty isn't reporting, and if it's outside the European Union, that's okay. If it's inside the European Union, it'll tip them off who's not reporting.
And another one which we'll go through quite quickly, but just for clarity, in the case of intra-company, intragroup transactions, do both companies have to report to the TR, to A3R? TR?
If we take an example for ourselves, where we're taking the MiFID definition, so the PLC may not need to report, will not need to report it, say, just one FX forward. If we're doing that with an external bank, if we're doing that on behalf of one of our Swedish entities, for example, then we've set up LEIs for our Swedish entity, and rather than have different people, different treasury people around the globe reporting, we're going to do it ourselves. So yes, we will report that on their behalf.
Thank you. Moving now, I suspect these are pretty much aimed at Trade Repository. In terms of reporting, when a deal comes to its maturity date, will you automatically remove it, or is that a change to the transaction?
No, I think it just matures.
It matures.
Looked in that to you do an instruction for that. I mean, we've got a conclusion you don't.
Right. So your systems will mature it, as it were.
Yeah.
Good. And very much linked to that, if I have an amortizing swap, and when I originally report it, there is a profile of how its amount steps down, will your systems be able to adjust, or do I again have to report that as a change each step down?
Who wants that question? On the basis that there's always one. This either falls into one of the categories of interest rate and like that, or
the example here is interest rate, yeah.
Okay, or into other. So the idea is that you would instruct that as one transaction with all the flows in there. Now, of course, you want to see the other side of that trade to see that they're seeing that as an amortizing swap and not a series of cash flows, because if they have a series of cash flows, it will be different. But so long as it comes in, so you say this is the kind of field to be populated for that, as long as they're populated for that, it can take account of that. And that means so things like changes to nominal and notional. And we spent 3 hours on that conversation once, in terms of how did it come to this. We think we can do that. And so we'd love to see that file if someone would want to send it to me, and I'll try and find someone to answer it. But no, we think we can handle that, an amortizing swap.
I mean, speaking generally, it does sound as if some things will evolve in the weeks and months ahead, that even if there isn't perfect clarity right now. Valuations. There is a field for reporting valuations on transactions. What's the status there for NFCs? Do I have to revalue daily, is the question.
I mean, ourselves, we do that already, again, on the Treasury system, so we're quite fortunate that we have that valuation. I know for reconciliation so far, we have been reconciling that with our banks, just doing the testing. And for reporting, if the field's there, and it's asked for, then yes, we're able to report it.
We're thinking, you've got day one, 12th, and someone said, and then you've got day two, which means sometime thereafter, rather than literally day two. There is a date, and it's the 12th of August, and as soon as I say it, I know that's a Saturday, but it's the 12th of August is when the next rollout comes in terms of the report. So it's on the 85 fields, and it's around portfolio. It's around valuations, collateral, and margining, and it comes in on that date. So there was a meeting with ESMA a week last Monday about these points. It was brought up whether the trade repositories were going to take those valuations and trying to calculate P&L, which we've never thought of. That's a service we certainly didn't apply to that service and don't intend to. So, but in terms of trying to work out where risk lies, that whole idea that falls into that bucket. So we think there's certainly no valuation requirement as of now, and we think that's right that someone's picked up that field. It sits in with that whole clearing part towards the back of it, and that's
yeah. Certainly, I've seen that 180-day delay for requiring reporting valuations, but that really applies to financials or people who are obligated to report.
Yeah.
For an NFC, they don't actually have to report valuations, but obviously, if you have them to hand and are able to there's never any problem over-reporting.
It's there and you got it.
Yes.
Initially, while things just settle down, it's easy for us to report it.
I think we've time for one more question here, which relates to spot deals. Does a spot deal have to be reported, and do the settlement terms affect whether it has to be reported? So, and I think they're thinking here whether the spot is done for more or less than 2 days, I guess, because you can do a sort of more immediate spot, if you still call that spot.
And again, for us, because of in the UK applying the MiFID definitions and the FCA guidance on that, that question isn't really relevant for us.
FX is out in any case. Yes.
My understanding is that a spot deal covers anything up to 7 days. So on that basis, I'd suggest it's out of scope.
Yeah, I think the opinion is a spot is out of scope in any case, and there is this 7-day sort of assumption, certainly that the FCA applies, that less than 7 days would particularly count as a spot and not be reportable in that for that reason. The deadline is a couple of weeks away. We've got the question here: will the deadline be pushed back?
Well, choke points, as I said, a bit of a cue for the LEI. Choke points is who's going to be ready or who is least ready. So there's a lot of inquiry around where the clearinghouses are, and I think they're okay. The exchanges obviously don't have to do too much here. I think in the over-the-counter part of the market, it always was going to be a problem to basically put the UTI on backloaded trades and to be able to report those trades efficiently, because a lot of those trades are done voice. That's known, though. That's a known status. I think it's going to be dependent on whether all the trade repositories are able to take the trades in. I think they are. And then there is a dependency on inter-trade repository reconciliation as well, and where that's at. But there could, EMIR has said this is, basically the regulation is, and the Commission is clear on this, starts the 12th of February. ESMA had asked for a delay on some of the products and got knocked back on that in November. However, ESMA could delay if it wanted to, because it is the regulator and has taken into account, let's just call it financial stability. So it could do on that. At the moment, I think it's unlikely, but I think there'll be daily stories about who's ready and who's not ready. But it depends what ready means and what success looks like. I don't think success is 100,000 legal entities reporting 5 million trades, both sides are getting matched up to 85 fields. That's not success. That's way over success. Success is endeavouring to get in a CSV file or anything that looks like one with most of those fields on into a trade repository, so that they can match within the repository and then hopefully across from there on.
Are you aware of any delays on onboarding clients at the moment? I really think the trade repository is going to get full. I do. I think there's so much inquiry going on now, here's one of the problems: group companies. Mm-hmm. So you might sign up with someone and you think that's great, it's a group. We've got 634 legal entities. So that means there's a lot of keying, because because the systems have to be separate. ESMA's very, very clear on this. So I think it's going to be important. I actually think the choke point is probably going to come within banks, and banks the corporate sector, because when we talk about delegated reporting, people were talking about financial markets. That's kind of clear. And one of the questions was, would the banks offer it to clients? Well, they will to some clients in the clearing world, but not all, that's for sure. But I think in the banking world, they didn't wake up. And I think a lot of people abroad didn't wake up that they had reporting requirements as well.
So, we're almost there, but perhaps not 100%. I think the time has come to wrap up. First, my thanks to the presenters we've had today, and especially to CME for their sponsorship. Thank you to all of you for attending, and for those who've submitted a question. As I said, if we didn't manage to get through your question, we'll try and add it to our own FAQ on our website. The details of our FAQ are up on the screen there. These have been generated by real questions people sending in, so we hope they're practical and helpful. There's also a reference there to our general page on OTC derivatives, where we've got a briefing note and, in fact, links to various other useful information, and we'll certainly add the CME website on UTIs or the resource on UTIs to that. We will be putting up a recording of this webinar on the ACT website. That will be in about 2 days' time. There already is a library of previous webinars, and we have run webinars covering various aspects of EMIR, so by all means do go back and look at those. Finally, just looking forward, the ACT does have a range of major conferences coming up in the UK and abroad, so do take advantage of those if you can. We have a very full program of webinars on a range of topics that are being arranged for the rest of the year, so keep a lookout for those too. And finally, can I wish you all well in finalising your EMIR arrangements, and good luck with that, and thank you.